Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Cliff Cupchin, he's chairman of the Eurasia Group. Cliff, thanks so much for joining us here. Again, speaking with Roz Matheson of Bloomberg News, the latest news is that President Trump appears to be taking a little bit of a pause here. How do you think this potentially could play out? There's a number of scenarios I know you've kind of gamed out.
Most likely is there's talk for a week, 10 days. The Europeans lead the way. Iran refuses to give up domestic enrichment, and the U.S. takes out, or tries to take out, I think probably can take out, the Fordo enrichment plant, which is under a mountain. That would be escalatory, dramatically escalatory. You get a big spike in oil. There are other scenarios where I don't think Iran would try to close the Strait of Hormuz. We can come back to that. Other scenarios where this does escalate, and even more in response to the U.S. strike on Fordo, Iran tries to take out, stop shipping through the Strait of Hormuz. And then there's a small chance, maybe 1 in 5, 20%, I think is how I game that out. These talks actually work. But it's a really, it's kind of a Hail Mary, I think, by all sides, because no sides want to escalate. But I think it's a really small chance.
Cliff, I've seen a lot of sort of guesswork and estimates regarding how many missiles that Iran really has left in their stockpile. They've used a lot have been destroyed by the Israelis. Is it a possible scenario that in this 2 weeks, that stockpile just runs so low that they are unable to keep launching at Israel? And is that enough to sort of bring the temperature down on all of this?
I think the rate of missile salvos from Iran is already dropping.
Yeah.
They are, like any country would, I think, going to keep some in strategic reserve. And, no, I don't know. I don't think anybody knows, at least in the unclassified world, exactly how many they have left. But I think they're all already running low. I mean, Iran just doesn't have good options right now. We'll see if they hold to the hard line, or which I think they will, or if it actually, they run out of resolve and they concede.
Cliff, is regime change a policy or a strategy that Israel and/or the U.S. should proceed or follow in Iran? Is that even on the table, do you think?
I don't think it's, verbally on the table. I think that Trump doesn't want it. It's, just stepping in too much. I think Netanyahu would like it if the Iranian people rose up and it did what, in his view, is finishing the job. From a historical perspective, almost every time the U.S. is engaged in regime change, something unexpected happens, and it doesn't work out like we thought it would. Iraq is the best example. When we did take down Saddam Hussein, and we got a failed state. So I don't think it's very good policy. I think it's really risky policy. If you're Israel, you have a chance to take down the devil right now. History's on your side for the first time in decades. And I think for the Israelis, this is a period of maximum Bibi, of the winds at our back, and this is a generational chance to take down our arch enemy. So tricky policy. I think Israel would like it, may go for it. The U.S. No, it's not what's on the table for Trump.
Cliff, you mentioned the Strait of Hormuz, like such an important part of global shipping and a potential bottleneck there. And you said you don't think Iran will try to shut that down. Why? What makes you think that?
It's a lose-lose for them. They need to get their oil out. Tremendously dependent on oil revenues. 100% chance the U.S. comes into the war in a major way. They probably get the Gulf armies, French, UK involved. And, the Iranian leadership is smart. I haven't been there in a while, but I used to go, a number of times. They're smart. They get it. And I think they know they couldn't keep the strait open for a long time. They couldn't close it for a long time. The thing I worry about is that when regimes get desperate, they do irrational things. And if the U.S. takes down Fordo and the nuclear assets enrichment are really blown up across the board, the regime could get desperate. And we could see that would be an irrational act. They could do that. And that's what I fear most.
Right.
That's the scenario that I fear most about the Strait of Hormuz.
Okay. Cliff, thank you so much for that. We appreciate your perspective. Cliff Kupchan, he is chairman, Eurasia Group, joining us here to give us kind of gaming out some of the options, base case, kind of a bad case, and then maybe a stand down case. Everybody just kind of goes back. So lots of options out there. The next seems to be the role that President Trump decides that the U.S. will play, if any, in any future action. So we will have continued reporting on that.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
When we talk about commercial real estate, I often make the mistake of just thinking about commercial real estate, offices and stuff like that. And when it's a lot more than just office. It's industrial, it's retail, and multifamily, all that kind of stuff. And each of those subsectors have different fundamentals driving it. So but we'd like to talk to some people who do this stuff for a living, who are experts. Liz Hart joins us, President, Leasing North America at Newmark. She's in Cali at the moment. Liz, in the broader spectrum of commercial real estate, where do you guys see maybe the best value these days?
Well, I think what's really interesting right now, the demand is really up, and that's the thing to talk about first, and then we can talk about where the value is created. So demand is up 30% year over year on a national basis. That's tenants touring the market and looking to expand. Of those tenants that are touring, 2/3 of them are looking for the same or more space. And it's really shifted where in the last quarter, it went up by 20% of more tenants that are looking to expand. And I think when you see that kind of demand, going back to your question about value, you want to look at those markets that have been a little bit more distressed, but are now starting to see tenants that are touring again, looking for space and willing to commit to a longer term home.
Yeah, Liz, I wonder what explains that uptick in demand. Is it, my guess is it's that era of the work from home job is over. Is that part of it?
That's certainly a part of it, but I think the other part to talk about is the resurgence of the tech sector. So during the last 5 years, tech went from being a pretty major player in demand to being a little bit weaker. But now tech tenants are back to being 20% of the overall demand, just behind financial services as the top at 22%. So you're back to seeing tech back in the market, and you're seeing, particularly out of the San Francisco and New York markets, tech that's taking a lot more space year over year. You're seeing that growth from AI companies. So, everyone talks about AI having less space, but it's interesting that the AI companies seem to be very committed to the office and being in person.
Talk to us about San Francisco. That was a market that arguably a poster child for, what can really go wrong in the post-COVID world on so many different levels. What's your view of that market right now?
I'm feeling very good about the San Francisco market right now. It's always been a boom bust market. That's something that real estate investors have known for years. But what's really positive again is we're seeing a couple things. First of all, the demand at pre-pandemic levels. Keep in mind, right before the pandemic, there were 1 million square foot requirements that were there. Do we have those again? No, we're not at 1 million square feet in big tenants. We have some really good 100,000 square footers that are out there, and we have a lot of growth from companies that are under 20,000 square feet. And in the tech industry, that's just a couple more years until they grow again. So we're seeing a lot of resiliency. We're also seeing great commitment from companies that have been there for a long time. JP Morgan just renewed their lease. Morgan Lewis just had a big move into the Transamerica pyramid. So those are more traditional industries that are also committing to that market, showing the resiliency across more than just the tech sector.
Liz, how about that retail sector? It's obviously been under pressure for years now with the shift to e-commerce. Has that sort of bottomed out to some degree? Is retail firming up at all?
Well, I think what's interesting, and you might laugh at this, is, malls are back. Class A malls, 95% occupied. That smaller format, high street, performing exceptionally well. So we're excited about what we're seeing on that front as well. Americans love their brand. The whole world loves their brands, right? And we like to go and experience it in person. And the other trend we're seeing is a shift to more experiential retail. So when you have that retail format, you are there to shop. You're also there sometimes to do your returns, but you're really there to interact with that brand and amplify your experience with it.
Higher interest rates are one of the reasons that we're not seeing a lot of activity in the residential real estate. How are higher rates impacting commercial real estate?
I mean, look, rates are one of the things that impact the overall commercial real estate market. I think the thing that we're looking at a little bit more closely right now is the labor trends and the business formation trends, especially on the leasing side. But I think people are adjusting to the reality that we're living in with higher rates than we were used to traditionally. And at this point, you have to move your business forward. And to do that, you need to have your commercial real estate. You need to have a place for your people to go.
Liz, the tariff policies and the sort of austerity policies under the Trump administration have had an effect, a trickle-down effect on pretty much every aspect of the economy, or at least people are bracing for that. I'm wondering if there's any knock-on effects for CRE from everything going on.
Yeah, absolutely. I mean, I think, look, the tariffs have been a catalyst for some and a constraint for others, right? It's going to be a little bit of a mixed bag. But I think, probably the place you're feeling it the most is the industrial sector. And you will see some contraction in those West Coast port cities, just based on the tariffs and what's expected. But what's interesting is you're seeing a couple shifts. As an example, Phoenix, Salt Lake City, places that have great intermodal infrastructure, they're doing exceptionally well right now. Another thing we're seeing that I'm kind of fascinated by is a lot of corporates committing to buy their industrial real estate. So I think that, we're seeing more than we've ever seen. And that's just a commitment to having, more stable supply chains within the U.S.
Here in New York City, Liz, what's the call in this market right now? Mike and I are working in an A-plus quality building here at Bloomberg, fully leased. How about the rest of the market?
Well, you have one of the best buildings in the entire country.
Right.
But the good thing about New York is New York demand is also back at pre-pandemic levels. It's 27 million square feet. It was 20 million right before the pandemic. So I think it's heading the right direction. Trophy has definitely been one of the more dominant stories in New York. And we think that it will continue to be a dominant story going forward. Post-2019 construction is definitely what a lot of the trophy tenants gravitate to. And we may even see a couple new buildings pop up, given that demand, right? Because that part of the market is exceptionally tight. Tech is also coming back in New York City. It's much bigger than it has been before. There's a bigger concentration of tech talent in New York than anywhere outside of the Bay Area. So I'd expect to see some booming there too.
Liz, thank you so much. Appreciate it. As always, Liz Hart, president for leasing for Newmark. She's out there in California.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We heard from the Fed this week, and I would say it kind of came in line with expectations. That is, the Fed's not looking to do a whole lot right now. It's going to wait and see, maybe continue to take a look at the data. And that seems to be the play there. Ira Jersey, chief U.S. interest rate strategist at Bloomberg Intelligence. He joins us from the CAM down in Princeton, New Jersey. Ira, any takeaways from you from Fed Chairman Jay Powell and maybe his commentary or the reading of the note?
Yeah, I think a little bit. The Fed is still neutral right now, but they are, I think, prepared to cut if they need to. And certainly we learned a little bit more about the reaction function that we might get. But, there's still this overhang of what will tariffs do to inflation and inflation expectations. That was brought up again on Wednesday by Fed Chair Powell. So, until we wind up with probably 2, maybe 3 more kind of inflation prints to see how inflation is kind of adjusting itself because of these tariffs, we probably won't hear much from the Fed. Now, importantly, and this is something that he did talk a lot about, was about their policy framework. So it's possible in August or September we'll wind up hearing from about changes to their communications policy. Do they make changes to the dot plot? Do they make changes to the summary of economic projections? All of those things might come out. And he gave us a lot of information about that, a lot more than we had anyway previously about how those discussions are shaping up.
Ira, then this morning we had Fed Governor Chris Waller. He was on CNBC, sounding very dovish, which I guess is not such a surprise for him. He is considered, one of the sort of uber dubs at the Fed. But he mentioned possibly cutting as soon as July. I wonder what you make of that. Is that really a far out there outlier of an opinion? Is he auditioning for President Trump's pick for the next Fed? What do you make of it?
So it's possible that he's auditioning for to be the Fed chair. And he'd be an interesting choice because he is kind of yes, he's on the dovish side, but he's also a mainstream kind of Fed thinker in general. Now, the fact that he's dovish is because of his view of the economy and the outlook. And the thing that Governor Waller has brought up is, look, we need to do things in advance because of, the long lags that monetary policy takes to affect things. It winds up being, 6 months to 18 months before an interest rate cut, one interest rate cut, much less several, actually filter through the overall economy. So I think his view is, hey, the economy is going to be much weaker this fall than I think most forecasters and his peers think. So therefore, we should start cutting in July. Now, he's in the minority with that very clearly. But there are these, the median suggests that we're going to have 50 basis points of cuts by year end. But there's also this whole other camp that thinks they shouldn't be cutting at all, right? And we can't discount them because that's a large minority of the committee. So Chris Waller, yes, he's on the dovish side, but remember, there's also these more neutral to hawkish members that are suggesting, hey, we should really wait and see because the economy is not that bad and our outlook isn't terrible yet. So I do think that he's certainly in the minority. July is off the table. There's no way that they're going to cut in July.
One of the issues obviously facing the Fed is inflation, and Fed Chairman Jay Powell said that he believes higher prices are coming as a result of tariffs, but we just haven't seen it in the data yet, Ira. I mean, how do you think the Fed's thinking about tariffs, thinking about possible inflation? Because, again, we just really haven't seen it yet.
Well, goods prices in some categories were a little bit higher if you look at the May CPI report. But keep in mind, there's a couple of things. Part of this is timing. Like, we always expect things to happen in a 30-minute sitcom type of situation on TV, or now maybe a 5-minute YouTube video, right? But that's not the way that the real world works. We're still working through inventories that companies had prior to tariffs being implemented. So, and then it takes a month or two for the new goods to come into the country and for those tariffs to actually affect the prices of those imported goods. So we're only going to start really seeing that in the June data. So that's why the next two, I think, inflation reports are going to be key to how much of the tariffs are being passed through to the consumer via higher prices, how much is being absorbed by both wholesalers and retailers in terms of or even manufacturers, and in them lowering prices versus the higher tariff. So all of these things are still question marks that we don't have in any of the macro data. On the other side of that, Paul, you have to remember there were other things like services and housing that actually saw slower price gains, and that's one of the reasons why you didn't see an aggregate CPI spike up at all, because of the slightly higher goods prices.
All right, Ira, it's the summertime, which means I don't have to worry about soccer and all that stuff. But now you got the Club World Cup. What is this?
The Club World Cup is a kind of a thing that FIFA made to try to make money, and bringing in basically regional champions from all around the world. It's really not been a particularly good competition because you have European teams are absolutely slaughtering teams from other places around the world.
Hey, Miami did beat Porto. Let's not forget.
Yeah, that's true. And actually, PSG had what was upset as well. So there have been some good games, but I don't know. I'm watching the Gold Cup. The U.S. men's national team beat Saudi Arabia last night 1-0. And because that's a warm up to the actual World Cup, the real thing that's going to happen next summer here.
I just can't. There's so many tournaments and their clubs, the countries. I can't keep track. There's too much stuff. That's why we have Ira Jersey. He does the interest rate thing on the side, but he's really our go-to person on all things global soccer. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.